Yes, yes.
Okay. Welcome to ISLA's Team ISLA's Training and Education Department. Today we have a 33rd webinar session. Today we have a panel discussion on adequacy of sum insured with Mr. Atul Kapoor sir, Mr. Pishu Shukla sir, Mr. Sandeep Mashru, and Mr. Sainani sir. Due to a technical error, we have started late. We are sorry for that. And with this inconvenience, I will request to all the panelists to start discussion on today's topic.
Okay. Thank you, Sachin. Thank you very much, and welcome, Atul. And today we are going to discuss about valuation, value at risk. But the question is that why we need to have value at risk in any insurance. And when I address this issue with most of the motor surveyor who are also doing miscellaneous claims, I always find that they are the most confused person about under insurance. That how to apply under insurance. They know, yes, under insurance to be applied. If the value at risk, value of the subject matter is more at the time of loss than the sum insured. But in different circumstances, how it is to be applied. But there are different situations, then how it is to be applied. That's the question is always. So we have 2% here, Atul and Sanjay Mashru. So by the time Senani joins us, so first I'll ask Atul that what is the basic theme of under insurance? Why it is applied? What is the basic theme of under insurance? Number one, and number two, is there any other policy insurance where it is not applied under insurance? Or specifically certain policies is applied, in certain policies is not applied. Broadly in insurance where we deal claims. Atul.
Thanks, Vikramji. And till Senani sir joins us, my personal view is that most of us who are working would realize that underinsurance is a concept because if you have insured something for a lesser value, then and you've paid premium for a lesser value, and if you're actually holding whatever asset it is, maybe stock, maybe building, maybe plant and machinery, if the value of that is more and you are paying premium on a lesser amount, therefore it is logical कि आपको पूरे claim का हक नहीं बनना चाहिए, because then the insurance company is losing out somewhere, and it's illogical that you pay premium on a lower figure and you get a claim on a higher figure. So to bring them both at par, some portion which is on which you've not paid the premium, that proportion, the underinsurance is applied. And yes, there are few policies where underinsurance concept is not there. For example, policies which are having limit of liability kind of policies where it doesn't matter. For some cash policies, for example, it doesn't matter how much the total value at risk, but if you have actually lost anything within the sum insured, you can get the full sum insured or the amount that you have lost. So there are certain policies like that. Mashru sir, maybe you can take this further.
Yeah, good evening to all.
Sure.
Thank you. Like first loss policy where sum insured is fixed, that is the first loss is declared. Those policies, yes, maximum liability is there irrespective of what is the quantum. So those are my views on that.
Okay. If you look at Atul, what you have said, suppose this is a room and this is insured for say about 1 lakh rupees, this entire asset survey, right? And now fire broke out, and out of the fire, AC is damaged, computer is damaged, this table is damaged. This is okay, the printer is okay, but this is damaged. So there are certain properties which were damaged, there are certain properties which were not damaged because of there was a partial loss. So in a partial loss situation, this adequacy of sum insured become very, very important for the simple reason that suppose the value is 1 lakh, the sum insured is 1 lakh, and if you take all the values which were the asset which were lying here just prior to the fire, his value is 1.5 lakhs, then it means that 0.5 lakh assets worth were not insured, correct? When the fire broke out, then how we can demarcate that this asset was insured and this asset was not insured? Because suppose this computer was damaged, so we are not sure that in 0.5 it comes under the 0.5 or it comes under doesn't 0.5. Therefore, we use a unitary method equation, which you have learned in class 8th. That is simple. Itne mein itna to itne mein kitna. Very simple. If the sum insured, if the value at risk is this, loss is this. If the value at risk is this, which is the sum insured, loss is this. See, so the loss multiplied by the actual sum insured and divided by the value at risk will give you the actual loss. But simple. I mean, let us not make it complicated. So that is probably the basic idea which I get after discussion with all. So this is the concept. That's why we apply underinsurance, because we do not know that which property is insured and which is not insured, and which is the part of 0.5 and which is the part of 1 lakh, which is sum insured. Then we apply a average cost. Itne mein itna to itne mein kitna. Now another question comes that at what time we'll see the value at risk in different policy, in different clauses. Say in fire policy, at what time? At what time that this is the time the value at risk to be taken? In the machinery insurance policy, at what time? Or the RIV policy, at what time? So my questions from the panelists, the respected panelists, are three. That in fire insurance, the value at risk is to be ascertained at what time? And in machinery insurance at what time, or all engineering policy at what time, and in restatement policy at what time? Atul.
Sir, I can take the first and the third. The second, I don't do engineering claims, so maybe I'm not the right person. But in a fire policy, I suppose it should be the date of loss. But in a reinstatement policy, there is a little different concept. There is somewhere it says the date of reinstatement. So the point here is that because you're having 1 year to reinstate the property, main fire policy में तो कोई issue नहीं है, because जिस दिन आपका loss हुआ आपको उसी दिन की loss मिलना है, उसी दिन के rates पे मिलना है. So there is not too much confusion. But in the case of a reinstatement policy, you get 1 year to reinstate the entire property. So therefore, you may land up with a situation कि आपका loss जिस दिन हुआ उस दिन rate कम थे, जब आपने reinstate कराया उस दिन maybe the rates have gone up. So to accommodate that, the reinstatement value policy does say that the value at risk needs to be seen at the date of reinstatement. Now, it's a little gray area. What will be the date of reinstatement? But conceptually, to account for the fact that since you are allowed a higher rate or a different rate from the rate existing on the date of loss in the case of a reinstatement policy. So therefore, the value at risk should be taken on the date of reinstatement. But there are gray areas there. I think Shukla sir will be able to explain better. But even in that, there are some gray areas. But on the engineering policies, I would not know.
In that, if I add one counter question, if date of reinstatement of multiple asset is over the period, then how to work out in those scenarios?
Exactly. So those are the gray areas. Shukla sir, would you like to comment?
यार ये तो तुमने ऐसा पूछ दिया कि जाहिर शराब पीने दे मस्जिद पे बैठ के, या वो जगह बता दे जहां पर खुदा न हो. चलो.
I think ultimately though everything you have to devise a logical.
Atul told about the RI policy. What is your opinion about RI? Are you agree with Atul about the to be on the date of restatement?
Yes, I agree, sir.
You
I
have
agree.
a question is the different date of restatement, how it will be the different date of
That is a gray area, because there are multiple assets which are coming over the period. Then how to, whether you should average or last machine when it is erected. That is how it is, because there are supply lead time is also different from time to time. Say it's for 6 months. So escalation creeps in for last machine which is coming. So
Correct.
how to look in that? That is a critical aspect, sir.
Okay. So coming to the first question, first point, that what time should be on the case of fire. So we see the adequacy, the condition for under insurance in the fire policy. It is at the time of breaking out of the fire. So it means breaking out the tire mine at the time the fire broke out, what will be the value of the risk at the time of loss. Now, before I come to another question, another clarification about RI policy. Suppose there was a spontaneous combustion claim, and in spontaneous combustion claim, there were the goods were there were a lots which were staying there, and it was suddenly catch fire on its own. It's an oil cake stack, and then fire spread, and the adjoining bags were also affected. Or there was no external fire, did not spread, and only that stake was affected. So here, what will be the value at risk? Particularly keeping in point spontaneous combustion clause, yeah, in solid combustion, I don't cover if you see the wording. What should be the value at risk? In a stack, we suddenly caught fire because of spontaneous combustion. And if you take that only, that stack only, that there was only that stack in the stock. It has contained about 100 bags, and suddenly it caught fire. And the sum insured is about say 20 lakhs. And the value of those bags, sound value of those bags was about 22 lakhs or 20 lakhs. And after some time it catches fire. So what will be the adequacy of the sum insured in this case?
Sir, my particular first impression is, yeah, would you like to take that?
Yeah. Yeah. In my view, entire stock which is at a location, including where spontaneous combustion started, it is a value at risk. 22 lakhs, in my view, it will be.
22 lakhs is a value. Acha. Atul, what is your view?
If I understand the question correctly, are you saying that one stack is 22 lakhs and there are many other stacks also?
There was only one stack for 22 lakhs, and there was no other stack. There was only one stack, and it caught fire because of this spontaneous combustion. There was only one stack. The sum insured is 20 lakhs. The value of the entire stock in that stack is 22 lakhs. Then what will be the value at risk?
And then I would tend to agree with Marshall sir. But after this question is solved, I have another connected question. If there are more than one stack and the loss is only in one stack, then what would be the value at risk? But please guide us on the first one first, Shukla sir.
Yeah. Because it happens in one of the claim. I have done it, and it was challenged by the insurance company, but I had done it. I think I had done it right, because if you see the spontaneous combustion endorsement, it say the under any circumstances loss due to fire only, right? It doesn't say flame only, it say by fire only. It means the moment combustion start, right, then it will become the value at risk. Breaking out of the fire, जो word है, if you see the breaking out of the fire under the insurance clause, breaking out of the fire कब हुआ? या the breaking out of the operation of the peril कब हुआ? When the actual fire started. But before the fire started, about 50 or 25% bags were already in the process of combustion, and the quality of the material was already been deteriorated.
Right.
It means, see, the value at risk of 75% bags which were precisely damaged because of the spreading over of the fire, the 25 bags which were in the inner layer and which were really responsible for the actual combustion. If you those take the 25% of the bag, there the value at risk is less. Actual value at risk is because they were already deteriorated, causing that fire. They are responsible for the combustion, right? So if you see in totality, the value at risk will be less as compared to the sound value of those bags. It will not be sound value of those bags, 20 lakhs, 22 lakhs, which I said. It will be less. And now there you have to make an assumption that it will be less by 10%, it will be less by 20%. That is my point. So I want the panelists, are they agree with this or not? It has some sense or nonsense?
No, sir. Everything Shukla sir says makes some sense. Only thing is sometimes we are not able to understand.
Yes,
That's all.
that's true. I agree with Atul sir in that.
नहीं नहीं, ये जो बात मैं कह रहा हूँ ना, क्यों अतुल, आर यू एग्री विद दिस, कि जो मैं बात कह रहा हूँ कि देवर बिफोर ब्रेकिंग आउट ऑफ द फायर इन दोस बैग्स the material value is already being reduced considerably when the actual fire broke
That
out.
is,
Yeah,
that part
deterioration
is
is
correct, sir.
If you see the actual the definition of this, right? Achha, then coming to the RI clause, that's wonderfully explained by Atul. That RI clause is for the this restatement value, time of restatement, because if it's a commercial problem, 1 year is already given to the insured. He can do the restatement early to avoid any additional financial pressure on the insurance company. If he does it and during the period he restate the property, there is escalation in the value of the risk, and unnecessarily insurance company are penalizing because of the financial constraint or because of delay supply or whatever be the reason. But here because you know the RI insurance is a depart for, basically we depart from the basis of indemnity. Here we are paying new versus old, right? So the मतलब insurance के subject में ये एक instance है where we have departed from the principle of indemnity by we are stating a property, a old property by new. Simply he has to declare that he want to restatement value clause. He has need not to pay additional premium. He has to actually increase the sum insured. So under insurance not applied. So there is a point that yes, that is see this this, and if you see the clause technically, it has two things to say. It also says in time of loss. It also says in the time of restatement.
There is a contradiction. That's why I said it was gray area, sir.
No,
There
it's
is a
not a
contradiction.
no, it's not a contradiction. It's not a contradiction. If it does it in time, it does it as a normal indemnity period, then it will be normal.
right.
But if it takes time, if you carefully read it, it has two parts. So initially I was also thinking there is a contradiction. So I was always thinking ये contradiction तो यार हो नहीं सकता, इतनी पुराना ये clause है, इसमें contradiction है. लेकिन वो apparently you see, yes, it seems a contradiction. ये लोग जो भी program देख रहे हैं, I request all of them kindly go and see it. You will also feel that contradiction. But if you go on further thinking and take it on the two part, you find it is very relevant. तो पॉलिसी में गलत कुछ भी नहीं लिखा है, हमारे समझने का चक्कर है, ये जो है वो थोड़ा सा इशू है समझने का. अब now coming to the third point, which will be of the interest of Atul precisely, I'm coming to the value at risk for plant and machinery. Conventional plant and machinery and in a factory, and normally what we does, we take additions, year-wise addition from the gross block schedule, and we apply depreciate, we escalate it by indexes, and then we depreciate it if it's an indemnity policy. If not, then we cut it there, and new replacement value may we see the inventory. Now there are two questions. One is, if there is a deletion of asset also, suppose you see, when you see the gross block, there is a deletion of the asset also, right? So how you deal with that deletion, and how you deal with that value of the deletion? Do you deduct it from that year to take it the capitalization, or there is something else? I think first I will, because Atul will give the right answer, I know it, but I want the question reply from Mashru first.
Yes, sir. Thank you. See, deletion is for the gross block. A capitalized cost in case of a loss, in case of a sale or a removal of machinery, they will remove from capitalized cost from the gross block in that particular year. Since that block is in totality as was capitalized was removed, correct? So we will escalate that for that period and then adjust in the total inflated value for the additions over the period, because that I have to remove from today's value. That is what my answer is.
So you say that you will escalate it. So you will escalate it from up to where? suppose some block is deleted. A factory was started in 1983 and a block was deleted in 2009, and you don't know when this was purchased. You don't know. Then how you will scale up?
You are referring to schedule only, no sir? You are referring to schedule only in there. Not in FAR. FAR will explicitly sell in year of purchase when it is purchased. FAR will tell.
FAR means
Fixed asset register.
The fixed
no. Suppose party don't have asset register.
Yeah, there is a challenge because see, but in case of if gross block is available, if it is a private limited company, then it will be the actual capitalized cost. Am I right, sir? Atul sir, do you agree with that?
yes, of
अतुल बताओ ये जब थोड़ा सा सिंपली एक्सप्लेन करो ये बात लोगों को, ये जितने भी लोग हैं इसको समझें. दिस वेरी इंपॉर्टेंट पॉइंट. We overlook this point. To kindly explain it simple terms so people can understand. Yes.
सर आइडियली तो मेरे हिसाब से अगर आपने वो एसेट से 2000 में बेचा है लेकिन खरीदा था से 1990 में, अगर आपको ये पता लग सकता है कि वो एसेट आपने कब खरीदा था और कितनी वैल्यू में खरीदा था फ्रॉम द फिक्स्ड एसेट रजिस्टर, तब तो आप उसको ओरिजिनल ग्रॉस ब्लॉक से वो ईयर ऑफ परचेज से ही निकाल सकते हो.
वही पे घटाएंगे. Yes.
वही निकाल सकते हो क्योंकि आपको फिर इंडेक्सिंग ये सब जरूरत है. बट
हाँ.
जैसे शुक्ला सर कह रहे हैं, प्रॉब्लम मोस्टली ये आता है कि वी आर नॉट एबल टू आइडेंटिफाई व्हिच ईयर इट वाज परचेज्ड. उसका सॉल्यूशन तो आई एम श्योर शुक्ला सर ने क्वेश्चन पूछा तो आंसर इन्हीं के पास है.
नहीं. इसमें एक प्रॉब्लम और भी आती है जो जनरल सर्वे फेयर करते होंगे. सपोज फैक्ट्री वाज स्टार्टेड इन 1972 या 73 या से 1980, but you are getting gross block schedule only for last 10 years. Then and there is no other way to ascertain value at risk. Because such a huge risk, you cannot ascertain the value at risk. There's no, it's a chemical industry which has piping and valve and different asset and this. Then how you will ascertain this? मतलब
सर फिर तो और कोई
कैसे?
तरीका नहीं है. आप या तो एवरेज कर लें, यू अज्यूम एवर सिंस स्टार्ट एंड टेक एन एवरेज एज एंड डू इट, और तो मुझे कोई और तरीका नहीं लगता.
Okay. So the participant, हाँ बताओ मशहूर.
आइडेंटिफाइबल नहीं है. दूसरा इश्यू सर इसमें ऐसा है कि जहां ग्रॉस ब्लॉक नहीं है, प्रोप्राइटरी कंसर्न है, वो लोग सेल वैल्यू पे डिलीशन करते हैं, तो वो भी एक चैलेंज होता है कि भी बिकॉज दैट डजंट रिफ्लेक्ट द एक्चुअल वैल्यू एक्विजिशन कॉस्ट.
वो WDV पे शायद करते हैं.
तो सेल ट्रांजैक्शन है. यस, क्योंकि वो इट इज अ ब्लॉक वैल्यू. जहां FAR है वहां पे इंडिविजुअल असेट कैपिटलाइज कॉस्ट के सामने आपको WDV मिल जाएगी डेप्रिशिएट करके, लेकिन जहां ब्लॉक है वहां ब्लॉक के सामने जो सेल रियलाइजेशन हुआ उतना वो माइनस करते हैं डिपेंडिंग ऑन देयर रिक्वायरमेंट. दैट इज इल्यूसिव. दैट डजंट गिव अ करेक्ट पिक्चर ऑफ द ग्रॉस ब्लॉक.
Okay. So where there is a complete gross block detail, और इनिशियली अतुल जानते हो कि जो फर्स्ट 2-3 इयर्स होते हैं तो मेजर कैपिटलाइजेशन उन्हीं इयर्स में होता है, और वही हमारे पास नहीं है ना. अच्छा, कहीं कहीं पे क्या है, किन्हीं ग्रॉस ब्लॉक शेड्यूल में भी सी द ग्रॉस ब्लॉक का टोटल भी आता है, किसी में क्या WDV आता है ओपनिंग बैलेंस. That is, so there is another challenge that वो WDV आ रहा है. अगर ग्रॉस ब्लॉक शेड्यूल आ रहा है तो then we can do some work. I mean if some gross total of gross block आ रहा है, WDV इधर आ रहा है, yes, then you can do something about it, something generous, something
I will add in that Atul sir will I hope Atul sir will agree that is available mainly in private limited company and above. In case of proprietary and partnership, gross block is normally not available because it doesn't mandate, whereas Companies Act mandate. Now even in partnership firm you will find two schedule, one for as per Companies Act and one as per IT Act also, because rate of depreciation. Yes, so in private limited and above we definitely have a age to calculate in realistic term. Otherwise, as you rightly said, for a individual or a partnership concern, then we have to rely on the fixed asset schedule, year wise addition and deletion in case if it is available.
Okay. So in case we don't have the gross block schedule to the extent that we have a WDV value and we don't have even the gross block total as the opening balance, then and there is a loss, a good loss, and then how do you have any alternative suggestion, Atul, about to go about the value at risk apart from the gross block schedule valuation of the plant and machinery?
सर ऑफ कोर्स या तो फिर फिजिकल एविडेंस से कोर्ट्स में जाया जाए, दैट्स वन रूट, बट अगर बुक से ही निकालना है तो दी ओनली अदर पॉसिबिलिटी इज कि आप WDV से वर्क बैकवर्ड करके आप उसका ग्रॉस ब्लॉक निकालो, एंड मे बी इन दैट द इंश्योर्ड विल हैव टू सफर, बिकॉज देन यू विल हैव टू अज्यूम कि ये मशीन्स जिस ईयर में फैक्ट्री शुरू हुई है तब से ये मशीन्स या इक्विपमेंट्स हैं, तो उसमें आप उसको एस्केलेट करोगे, उसकी WDV से आप ग्रॉस ब्लॉक निकाल सकते हो, बिकॉज यू नो द ईयर वाइज डेप्रिसिएशन रेट्स. तो कभी कभी वी आर कंपेल्ड टू डू दैट एंड देन डिटरमिन द हाइपोथेटिकल ग्रॉस ब्लॉक, लेकिन उसका ईयर हमें पता नहीं है, ईयर वाइज कितनी कितनी एडिशंस हैं, सो वी नॉर्मली विल देन हैव टू अज्यूम दैट द एंटायर थिंग वाज बॉट ऑन डे 1 एंड द सब्सिक्वेंट एडिशंस विल हैव टू बी इग्नोर्ड, पर उसमें फिर इंश्योर्ड को थोड़ा नुकसान होता है.
दूसरा एक तरीका है सर, जहां हम लोग एक मोटा मोटी या थंब रूल पे चले. नॉर्मली रेट ऑफ इन्फ्लेशन और एस्केलेशन इज लेसर देन द रेट ऑफ डेप्रिसिएशन इन इंडेमनिटी पॉलिसीज. तो हम ये इन केस ऑफ इंडेमनिटी पॉलिसीज हम सम इंश्योर्ड और WDV को चेक करें. सी रेट ऑफ डेप्रिसिएशन इज हायर देन द एस्केलेशन. इफ WDV is closer to sum insured, then it helps. सर आ गए, चलो we should come back on track.
हाँ, ये बड़े उस पॉइंट पे थे यार. चलो सेनानी, let's welcome. We are eagerly waiting for. There is one point I want you to discuss today about the foundation, जो तुमने बहुत अच्छा enlight किया मुझे. ये मैं इस presentation से ही समझने जा रहा हूँ. तो welcome सेनानी. Are you ready?
Yes, I am ready, but somebody has to help me out opening my presentation at organizer's end. Sachin, you have all the files with you, right?
So
hello?
which hello?
You start with presentation. You start with PPT. Then we have to open 3 Excel sheets there one by one. PPT खोल लीजिए आप. Now, one thing I would like to repeat after I mean listening to the discussion, this exercise of adequacy of sum insured checking or verification of adequacy of sum insured, this is not exact pure valuations job. This is basically if there's a identifying if there's a broad underinsurance or not. Okay, if we go by the valuation methodologies, there will be n number of questions which I think we will not be able to answer, and that would lead to a lot of difficulties. So to simplify this thing, no, our session ended last time at slide number 12. I'll start with this. Market value as on date of loss. This is something which we have discussed. In case of second-hand machinery, it is a bit difficult. We are going to discuss if time permits us. Betterment, adjustment, and partial. Okay. Now, verification of adequacy of some insured. What are the methods? We are talking of property only. We are not talking of injury. New quotes or price method. Say a small plant of, say a milk plant is there, where a complete line is procured right from storage, pasteurization, packing, and cold storage. There can be a single quotation available. That is one method, which is usually not possible. New quotes can be procured from insured or from market directly. Rarely possible from website. These are first cut quotes. We need to discuss. We need to identify whether the first cut quotes are in order or not. From your own data bank. Not possible all the time because we deal with a very large variety of risk, and it is not possible to have data handy in your data bank. Any other sources? A word of caution here. If I ask my colleague surveyor, what will be the cost of this plant? He will say, say 20 crores. I think that will be a hearsay unless it is backed up by suitable and sufficient evidences. This should not be relied upon. Now, while valuation is carried out, a detailed valuation exercise would call for noting down the specifications, variants, manufacturing year, capacity, weight, drive methodology, output per unit of time, quality, manpower requirement and deployment, space occupied, and obsolescence. I think these are the things which we discussed last time. Now, how this activity can be done in actual, I mean, for a surveyor, for a loss assessor, if we go and start working as a pure valuation science, it would be not only be a difficult, but it would be a big harassment for the client. Okay, when we are not in a position to get new quotes, when we are not in a position to get it from the market or web, the best method or most accepted method is go for a capitalization method, on which some of the points are already discussed by the panelists. Okay. First method is NRV computation quotation basis. Even if a quotation for the complete plant is given, or a complete plant, say a cement plant of 3 million ton per MTPA, or thermal power plant of say 25 megawatt or 50 megawatt. I think let us go to Excel sheet. Sachin, can you open Excel sheet number 1, NRV computation quotation basis? Yes. Now it's visible. Okay. Now let us go to a simple example of evaluating a value at risk of one machine. Let us think it's one machine only. Okay. Go to point number 1, which says cost as per quotation or market inquiry. Now this method, if this method is understood well, we can apply the same method for a bigger risk or a risk having a number of machines. Now, can you see there's a item number 1 is mentioning 100,000 rupees or 1 lakh rupees, right? Okay. Now next, if at all there's a betterment over a period of time for that machine, say a version has changed, or there's some improvement, some capacity enhancement, lesser power requirement, lesser space, more production, quality production. So we have to adjust for that. This may not happen in each and every case. For larger risk, the procedure would be slightly different, but here machine to machine comparison, it can be done. So the hypothetical new replacement value comes out to 90,000 rupees. Let us go to bit number 4. At GST 18%. Now here the most important question is whether GST is to be added in value at risk or not. The answer lies in whether insured is able to recover GST or get input of GST or not. If insured is able to get GST input, the GST is not to be added. And if insured is not able to get GST input, like the credit is blocked or they are the end user, they have to capitalize the cost. In that case, GST is to be added in value at risk. I think panelists are there. They will say something on this. Is it possible for them to comment? Atul?
Yes, sir. Yes, sir. Of course. I think by now all the attendees would be allergic to the word GST. So I think, but briefly speaking, yes, if they can get credit, then there is no need to add it to value at risk, because we will not be giving in the loss as well.
Okay. Now here one question was raised by again Rajesh Gupta, if he's there. Suppose if a machine is bought prior to GST era, okay, say Senvet era or moderate era or even Senvet era, okay, how to address to the issue? Now to this my answer. Why pointed GST era? Okay. My answer to the question would be, what we are doing valuation or value at risk evaluation in GST era. So we have to consider that if a machine is available for 1 lakh rupees and after betterment the value is 90,000 rupees, hypothetical replacement value, GST input is not available. In that case, we will add GST to arrive at value at risk of the machine on new replacement value basis, after adding certain components like transportation, erection, something like that. Now, in next slide or next to next slide, we will take up the foundation matters and other cost elements also. So after deduction of GST, the cost comes again to 90,000 rupees. You add transportation to it, you add handling, erection. We are talking of fire policies only. Okay, we are talking of absolutely fire policies, handling, erection, and other costs. There may be other costs also. I have given a hypothetical example of 2% towards transportation, 3% towards handling and erection, and 4% towards other costs. Now there can be these other costs can be varying from industry to industry. So we have to be sensitized on this issue also. The new replacement cost works out to 95,400 rupees. Now for depreciation we can use either of the two methods. So there are 8 methods. Simplest method is single line method, which is often confused with replacement cost of the machine divided by a life of the machine per year depreciation is arrived at. There was lot of discussion going on. To me, as I understand, whatever we have studied in engineering management and costing part, the depreciation, if you are applying single line method, the cost minus projected salvage value total divided by life of the equipment or asset, you will get the rate of depreciation per annum to be applied. Okay. Next method is diminishing value method. There are other methods also, but I think most of the people here are using either of the method. Okay. So diminishing value method में आपको ट्राई करना है कि भाई कितने per annum जाएगा, and after say 10 years life the salvage value or remnant value will be 20%. We can arrive at a residual factor. Okay, that residual factor is to be applied, and we will get total market value of the machine. This market value is again not to be confused with pure valuation science market value, but it is a depreciated value. थोड़ा कर्सर नीचे लेंगे सचिन और शेयर. Can we go down? Okay. Now how the average will move? But that's all. How the average will move? Suppose the available sum assured is 60,000 rupees, and on new replacement value basis or policy subject to restatement value, the value at risk is 95,400, and hence there will be an average or underinsurance of 37.11%. It is simple arithmetic, no need of detailing. Next is the same risk. Suppose policy is subject to restatement clause, and insured wishes to go in for market value, which they have option to choose. Even if it is RIV policy, they have option to choose market value settlement. So as against 60,000 sum insured, the depreciated value as calculated above works out to 66,780 rupees, and the average applicable would be 10.15%. Okay. I think next is for imported equipments. Now there's a twist here. Whenever an equipment is imported, what all information is required to evaluate that? थोड़ा cursor नीचे कीजिए please. Hello, so that we can read these points. Hello.
थोड़ा scroll नीचे करिए.
Scroll कीजिए ना.
नीचे.
Last import for imported equipments.
Yes.
Okay. The first point is CNF invoice in currency converted to rupees. Okay. Now suppose an equipment or a production line was imported from US or from Germany. We know what will be the पहले हम simple जा रहे हैं. We are not going in where details are not available. We are assuming that details are available. We can ask, okay, this production line of Tetra Pak milk was imported in how many dollars? Say 20,000 US dollars. So we know the currency during that year was exchange rate was so and so. Okay, we have to convert it into rupees. Then we have to add some lending charges. Earlier it used to be 1%. Now they have made it actual. Okay. Next point is add custom duty. Now the custom duty is to be applied is current custom duty. When we are trying to arrive at replacement values, I'll give an example. Long ago, the textile machineries, particularly polyester filament yarn, which is a famous case, a legal litigation case of Reliance versus Bombay Dye. Those days, the machines were imported at 125% duty. Okay. Nowadays, you will find that most of the duties varying between 5 to 15%. There's a benefit. A machine which was imported at 125% rupees, 125% custom duty is now being imported at 15%. So that effect needs to be given for imported machines. Niche, please scroll down. Hello, please scroll down. Okay. Now we have to add transportation up to the site. That means if it is a CIF offer, the freight would be included there. If it is FOB offer or ex-works offer, the transportation cost, that is ocean freight, is also to be added. Then erection charges. After that, we will arrive at NRV cost after adjusting for GST component, that is IGST in custom duties. Next would be to arrive at market value after adjusting for depreciation. Now there's a deviation here. Whenever an imported production line is there, these points are to be taken care of. Whereas if it is an indigenous machine, the above methodology is to be deployed. I think this finishes NRV 1. We can go on to another NRV 2. The sheet name is 2-NRV.
Yes.
Okay. Now, first one was based on quotation or based on estimate or based on web rates. There are some of the items where web rates are available, but I think the best method in case of absence of any other information is capitalization and indexing of the data. Now here, let us go to first point. What was the capitalized cost in year, say 2012? Say 1 lakh rupees. What was the indices now and what are the indices then? Now there will be a question from where we have to bring. Yes, there are indications, there are references available how to derive this data. Okay. Now you multiply this 1 lakh rupees with today's indices and indices of the year of procurement, you will get the replacement cost. This is only a hypothetical analysis or a mathematical method of arriving at replacement values. Now you have to go on adding year-wise additions. There may be additions. Now these additions, as per accounting standard 10, are only which are additions to the machine, not the maintenance cost. Now these additions can be added and similarly inflated to get the replacement values. And the total after GST gross block is 149,784. I assume that GST is there inside, or it is capitalized. If it is capitalized, that means insured is not going to get input on the credit, input credit on GST, and we have to analyze accordingly. If insured is getting GST, that needs to be shown separately and deducted from the cost. In any case, if insured is eligible to get GST, in that case, GST need not be capitalized, and that will be reflecting in a separate accounting type. Now, since we know the replacement value of several years of data analysis, say plant was started in 2012 and until 2020, there was capitalization or addition or expansion. That data will reflect from their books of accounts, and that we can arrive at a new replacement value. Then again apply depreciation. Now this depreciation can be for different years. It is to be worked out separately. We cannot apply single depreciation for 2012 and 2019. That will give us erroneous replacement values, and thus for arriving at depreciation, a separate each year is to be dealt with separately, and each year will have a different rate of depreciation and quantum of depreciation that need to be summed up and applied here to arrive at the market value. Scroll down, please. Hello, please scroll down. Okay. Now here again we see there are two datas available. One is 149,784, which is new replacement value, and another is market value or depreciated value, which is 104. Similarly, the same machine, 60,000 rupees is the sum insured. For reinstatement value basis, the under insurance will be 59.94, and for market value or indemnity basis, please scroll down, the depreciation will be different. Please scroll down. Hello. Here you will see that since the depreciated value is going to be less than new replacement value, the under insurance aspect will get reduced. Now there is one word of caution. We have to look for any escalation clause opted for by the insured in policy. If escalation clause is there, we need to jack up our sum insured for the number of days elapsed and the total additional escalation available. That needs to be added for rational analysis of the under insurance aspect. Please scroll down. Hello. Last point. Note number 2. Note number 2. Note number 2 is look for betterment. Now, in changing times, earlier the machines used to be electrical, mechanical. Most of the machines you will find that are now either retrofitted with say microprocessor controls, or new machines, old machines might not be having that advanced control systems, and the platforms are changing rapidly. So betterment factor these days is playing a very vital role, except desktop computers where there's a provision that for a next stage, next generation, there will be no betterment factor will be deducted. I think this is second method which you can apply in each and every industry, because if we start working as a valuer, as a pure valuer for financing or for advances, for amalgamation, for takeover, for merger, it is going to be a huge exercise, and that will not justify, our efforts will not be justified in loss assessment. Now we go to sheet number 3, which says, Sachin, sheet number 3. 3,
First
left top, first row. Yeah. Okay. Okay. Now this is for imported equipments. Okay. There are certain plants which have purely imported machines, or there are plants which will have indigenous and imported machines. We have to make two sets of computation for indigenous machine. Whatever we have done in indigenous machines, same thing is to be replicated for imported machines also, but the data required to be collected would be different from what is required in indigenous machine. Okay. Please go down to scroll down to the last portion, so that we can discuss first and discuss about the sheet later. Okay. Now, what all data are required for imported portion of the plant, or if it is an imported plant? First thing is exchange rate in the year of capitalization and currency. There are many currencies. The most commonly traded currencies are US dollar, Deutschmark, Swiss franc, Japanese yen, Chinese yuan, and some more. These are the currencies which are used for, transaction of the machines. Okay, so we need to know exchange rate of that year and exchange rate as of today when we are working replacement values, and import cost in US dollar or whatever currency it was imported of those days. Now there's one deviation here. I have indicated GBP. As we know that long ago in mid 90s, all these currencies were merged into one currency, euro. That is a very dicey thing. I have done a couple of jobs where during this period that particular currency was converted to euro during that period, and today's euro rates were compared, though little complex but not difficult, not impossible. That can be done. Second thing is exchange rate in the year of loss. After getting this data, we have to see custom duties applicable during that period. If it is already capitalized, so we have to bifurcate. We have to see what was the basic cost and what was the custom duty. As I gave you an example, sometime back, say about 25 to 30 years back, the duty regime, the custom duty regime was very heavy. Duties to the tune of 80-85% were common. 100-120% were again for specific type of machines were there. Nowadays, mostly all the machines are imported at 5 to 15%, barring few cases. Okay, so this is very important. Again, betterment factor, as I said, is an important factor which needs to be evaluated and evaluated very rationally. It should not penalize the insured. At the same time, it should not jeopardize the whole computation for imported machines. Thoda scroll niche karenge, please, if there is another point. Hello, Sachin, please scroll down. Okay, something more. Thoda or. Okay. Now we have seen adjustment of betterment factor is important. Let us go to the top of the sheet, please. I'm sorry I'm bothering you all because I'm not able to control these sheets at my end. Please scroll up. Hello. Please scroll the sheet on the top. Okay. Now again, what I'm giving is an Excel sheet which will be available to you all. I mean, you can make changes, you can make amendments as per the situation. There might be an error in my suggestions. Please do let me know what betterment can be. I have not given figures here. I'm going to explain what is the capitalized cost in first year. Okay, we have to find out. We know the currency, we know the exchange rates, we know custom duties also. which is to be taken care of here. Now, a very important and a very typical thing which is asked by most of the, our colleagues, how to find out inflation in that country. I mean, a country, an advanced country will have a different inflation rate, and third world country will have a different inflation rate. Okay, so to know these, there are standard data available, which I'll share at end of the session. There are data available. We can find out from those data what is the rate of inflation in purchase of the machine, and that rate of inflation can be applied over here to find out inflation effect in that country and the indigenous component inflation in our country. Okay, then we have to find out additions. There can be expansion, there can be addition of the machine. That thing we can work out, and the procedure is similar. Only thing is the elements of cost are different here and are to be handled in an elaborate manner. Come to GST. The GST CD input is available only for the IGST portion. That needs to be adjusted. If the input is available, not to be added. If input is not available, it is to be added. So we know the new replacement cost. Again, apply depreciation. Okay, and we know the depreciation value, depreciated value of the machine for indemnity basis settlement, and we know NRV for new replacement value. Now, these are the three methods. If we try it a few times, we would know. These are the mathematical models to arrive at replacement values. Could you please scroll down to the last portion of the sheet? No, little more. Now, if everything fails, method 1, 2, 3 fails. One is for quotation based, second is capitalization method based, and third is for indigenous machine based. If we are not able to make a comprehensive study of the risk from variation, adequacy of sum insured verification or valuation of the plant and machinery from insurance purpose, there is an absolute method which is to be used as a last Brahmastra only, as a Ramabana only, but only if all the methods fail and insured is not cooperating. In that case, we have to see what was the year of commissioning of the plant, say 1996, and the loss has occurred in 2020. We have to simply, because insured is not supporting, we are not getting any data. So we can go for an absolute method, giving full opportunity to the insured to share the data. Now, there are other methods to find out the data. We can go to websites, we can go to company law board, or there's a website which I have indicated. We can download their balance sheets of say 10 years, 20 years by paying. They are charging some 100 rupees to 500 rupees for that data. We can consolidate the information. If our job is justifying that, if the cost is justified, we can do that also. Otherwise, say what is the gross block as of today. That gross block is to be multiplied with today's indices and divided by the year of capitalization. As Atulji was rightly saying, we can average out. Yes, we can. But when insured is not coming forward to share information, they say we don't have any information. After giving ample opportunity, we can apply this method. But this is not a very decent and a very rational method of applying underinsurance. Okay. Now we can go to PowerPoint presentation, Sachin.
So PowerPoint, you have to open it.
I have to open. Okay, one more. And you have to give me control. सचिन मेरे को कंट्रोल देंगे तभी हो पाएगा.
Yes.
Okay. Now I'm going to show my screen. Okay. We have seen these three tabulation methods. Then we have discussed briefly about absolute method. Now, from where all these data will come? I have included a sheet, time series of indices 1980 to 2020. Please make a correction in this. This is 2020. I'm sorry, I could not correct it here. 1980 to 2020. This is a 100
Your
basis.
screen is not visible.
Pardon?
Your screen is not visible.
It is not visible. One moment.
You have not shared.
My screen. Screen. Visible now?
Now
Yes, yes.
visible.
PPT visible, yes.
Yeah, PPT is slide
Visible.
number visible, no? Okay.
18,
I'll
18, yes.
Okay, I'll repeat. Method 1, 2, 3, and 4. 4 is we have briefly discussed. That is only an indicative method of doing the things, not very well acceptable or creates lots of dispute. But combination of 1, 2, and 3 can give us a fair indication of gross underinsurance, if only, even up to large risk. But for up to medium risk, we can do it safely, normally accepted by everybody, all concerned. Or if an insured is disputing or disagreeing, we'll tell them, okay, you give us the method. Okay, merely saying that your sum insured is adequate is not enough. So we have to go scientifically on the basis of certain established working methodologies. So for this data, I have included a sheet, time series of indices 1980 to 2020. This 40 years data is available with 2004 as 100 basis, and it has been converted. I mean, when 2004 it was 100, for 1980 it was 19.4, and it has increased up to 230 something. That sheet you can see. I mean, Sachin, you are going to share all these, upload all these information, no? Including these indices, right? Sachin?
Yes,
Huh?
sir.
Okay. Now we go on to the next sheet. Okay, I can
Samir,
start.
ये अतुल
Okay,
कपूर
it
जी
is-
बोल रहे हैं।
Now I can, it has come to me. Okay, leave it. Now, there are some issues referred by Mr. David McWan, Mr. Sanjay Surpre, Mr. Sandeep Masru, and Rajesh Gupta also. Now, there was a question that most of the people, they consider wherever foundation and plinth word comes, sir, this loss is not payable. This particular portion is not payable unless separately mentioned in the policy. On the basis of question raised by Mr. Sanjay Surpre, जो कि बड़ा वाइड स्प्रेड है कि फाउंडेशन नहीं देना है. Yes, for building, it is very well there. The option is there to choose foundation and plinth in case of buildings. If the policy exhibits that plinth and foundations are exhibited separately, and insured has got option to choose, it is clearly indicated in proposal form. Okay. Now, in case when foundation and plinth is capitalized in building and it is not opted for in the proposal form or not exhibited in the policy, the designation of property clause will be of no purpose and use. We cannot take shelter, or insured cannot take shelter of designation of property and use. Now the second portion is foundations and plinth, plant and machinery. Now this is an area where the problem has come up. Say, let us take example of power hammers. There are 20 power hammers in a plant. There was a fire, and because of the fire, two post power hammer got bent or buckled, and because of the upward pull, the foundation got pulled up. Okay. Now, what I am going to supposed to do as a surveyor? The first thing is foundations are not covered. Policy is not exhibiting foundations, so it is not covered. Okay. I think this is my perception. I studied the complete tariff and I tried consolidate whether there's an indication in proposal form. Is there a question as to the foundations for plant and machinery? No, there's no question. The tariff itself is clear from A to Z that foundations, they are talking only about the building. Okay. Now, as per AS10, all the costs required to erect the machine or to make the machine operational, bearing few costs, are to be booked as a capitalized cost for that machine. And when foundations are not deleted or not separately, option is not there to insure these foundations, and hence plant and machinery foundation will form part of the assessment. That is what I feel. Now let us come to some annexures. I'll give, because ये questions अक्सर आते रहते हैं. Upper deliberations are summarized. Annexure 1 to 4 is including time series of wholesale price indices 1980 to 2020. with 2004 as the basis. Say now थोड़ा सा मैं इसको बिल्डिंग की तरफ ले जा रहा हूँ, though this was not part of the discussion, it was focused on plant and machinery. We can do this by unit rate method. Then there are indices available for building also, which is CIDC indices are there. Construction Industry Development Council website I have given, we can go there, and there are about 60 cities for which it is given. We can look to the nearest city and work out these. These are the details what they are doing, and they are publishing this data since 1998. Now I'll give some suggested readings. Valuation of Plant and Machinery by Mr. Kirit Budbatti. This book was published 2018, and I think much of my valuation knowledge I have derived from this book, thanks to Mr. Kirit Budbatti, who happens to be guru of many amongst us. Plant and Machinery Valuation by Dr. P.C. Gupta. He is no more. Again, a very good book. इनके दो वॉल्यूम्स हैं अलग-अलग. Valuation of Machinery and Plant by Mr. S.P. Juglekar, Mumbai. उस टाइम में मैंने 200 रुपए में खरीदा था ये. Fixing Sum Insured Under Fire Policies, Delhi Insurance Institute. Last reprint was 1992. It is out of print. ₹10. I got a soft copy, but because of copyright restrictions, I am not. Slide is visible. आगे की slide visible है?
नहीं हो रही है,
नहीं हो रही है. Oh my
विजिबल तो
God.
है. अच्छा वो
लॉक हो गया है
hyperlink-
सर, आप आगे नहीं बढ़ रहे.
अच्छा, मैं आगे नहीं, पर मेरे को तो दिख रही है सब. Okay,
तो
I'll go to 18 once again and try
सर एक
sharing.
फ्री का ऑप्शन होता है, वो तो नहीं क्लिक हो गया है. फ्रीज
हाँ?
स्क्रीन का ऑप्शन होता है, कहीं गलती से वन ऑफ द बटन सेज फ्रीज स्क्रीन, कहीं वो तो नहीं क्लिक कर दिया आपने?
ना नहीं किया. Please
अब वो-
नहीं किया.
18 पे है सर, आप सिर्फ
18 पर है. अभी कुछ आया क्या?
नहीं, सेम
कोई चीज?
साइड है.
Then Samir, you have to take charge. आप ले लो 18 से, अपन क्विकली इसको ब्रश अप कर लेंगे फिर.
सचिन,
नहीं सर, आपका ये मेरे पास आता नहीं है, वही तो प्रॉब्लम है.
I am stopping sharing. I've stopped sharing.
नहीं, लेकिन क्वेश्चन अच्छा ये यू आर टॉकिंग अबाउट which attachment?
Then
19.
PPT slide number 19.
नहीं, पीपीटी मेरे इधर ओपन नहीं हो रहा है. इट्स शोइंग
समीर
दैट
को दे दो. समीर को
मुझे
दे दो ना
देखो।
चार्ट.
संदीप को,
समीर नहीं है सर इसमें.
संदीप,
हाँ? संदीप
संदीप जी
कौन-
आपके पास है क्या?
है मेरे पास पीपीटी है, अगर आप मुझे दे तो मैं कर देता
हाँ, तो आप ओपन करो, मैंने आपको राइट दे दिया, देखो.
हूँ. शेयर करना पड़ेगा ना, यहाँ शेयर कहाँ करना है? फाइल में,
शो
फ्रॉम, यस, अभी दिख रहा है.
हाँ आ गया. स्लाइड 19 इज विजिबल टू मी.
20.
हाँ 19 पे ले लो.
यस सर.
Take on 19. Okay. I'll repeat again. I'm thankful to Mr. David McGowan, Mr. Sanjay Supre, and Mr. Sandeep Mashru, जिन लोगों ने ये इशू किया है. Foundations and planes for buildings are to be opted separately, but for plant and machinery, there's no need to opt separately. These are part of capitalization, and if foundations are damaged in the event of fire, these are covered as per my thinking, because after this question came, I tried studying and concluding in this way. Sandeep, can we go to next slide number 20 and 21? 20 we have discussed. 21. Now these are the annexures that NRV 1, 2, 3 and 4 we have already included, and I have included wholesale price index 1980 to 2020 with 2004 as the basis. Now the basis is 2011-12 100. We can work back with 2011-12 as the basis. We can work back up to say 80 also. There's a conversion factor. Next point, please. Okay. Now buildings. We can arrive at by unit rate method. We know the area. We know the class of construction. If it is of one type, unit rate, single unit rate would be available. If it is of 2, 3, 4 types, the unit rates applicable will be different. Similarly, what we worked out in case of plant and machinery, the capitalization indices of CIDC are available, published since 1998. संदीप जी थोड़ा करिए ना एक point आगे, ठीक है? So I have given the website. We can go to the website. There are about 58 or 60 cities for which indices are given. We can go to the nearest city data and apply in the area where we are working. Next point, please. Next. This is a brief about Construction Industry Development Council, which is publishing this data for building plant and machinery. If unit rate method is not feasible somehow for whatever reason. Slide number 24, please. Suggested readings: Valuation of Plant and Machinery, Mr. Tej Budpatti. Plant and Machinery Valuation by Dr. P.C. Gupta. There are 2 books. Valuation of Machinery and Plant Handbook by Mr. S.P. Joglekar. Fixing Sum Insured Under Fire Policies, Delhi Insurance Institute. Lastly published in 1992. It is no more published. I got a soft copy. I offer that if we can get a clearance from Insurance Institute of India, we can get it reprinted or we can circulate a soft copy. Then there is one more book, Fixing Sum Insured Under Engineering Policies, again 10 rupees book. Then Pocket World Figures, The Economist. Now this, why this is required? I mean, we can see the exchange rates, we can see the inflation of most of the countries for last 20, 30, 40 years. Next point, please. Now, ये जो indices है 100 years का, this is available in Statistical Outline of India by Tata Services Limited. Nowadays it is available for 800 rupees, not published for last 2 years. Data for capitalized figure down to machine details, fixed asset register. We have to go to the roots of initial capitalization, currency variation, betterment factor, CD variation, etc. for adequate and appropriate working. The data can be had from insured's FAR or old invoices, Department of Company Affairs. The websites are www.rbi.org and eaindustry.nic.in. इसमें आपको ये डेटा मिल जाएगा जो इंडाइसेस का है. Now valuation by Parks with commentary by Mr. Chatterjee. Parks is one of the best valuation books all across the world. और अगर इसको पढ़ेंगे और इसकी commentary को पढ़ेंगे तो I think to a very larger extent we will be able to clear our valuation doubts and that will help us in our adequacy of sum insured verification. Next point, please. M&S index. मैं बहुत ज्यादा इसके फेवर में नहीं रहता हूँ because I have seen the subscription cost is very high and this is applicable in very special kind of factories like fertilizer factories or some very big say जहाँ पर imported component mostly ज्यादा रहता है. I have tried but somehow मेरे को ये समझ में नहीं आया तो ये methods मैं adopt करता हूँ तो I am reasonably able to arrive at the replacement.
This is expensive and you have to subscribe.
Yeah, you have to subscribe, expensive and practically Indian environment में वो बहुत ज़्यादा real reflect नहीं करते हैं because वो global
for imported machine
for imported.
Sir, are these for US only?
No, I think we can use it, but misleading result आएगा. Now reference book, I am going to give all the reference book which I have listed. Statistical Outline of India. Next, ये Tata Services का publication है. This little data handbook, this will give us inflation of various countries over a period of time. Some 20-30 years data is available. Pocket World Figures, the economics, same data is available or similar data is available. So referring to 2 reliable books is going to help us. Now P&M valuation thoughts by Dr. P.C. Gupta, as I have already mentioned. Next, World Development Indicators. This is again mostly for inflation purpose in various countries and some other data is available. Valuation of Plant and Machinery, Mr. K.P. Budpatti. Those who are practicing as a P&M valuer, वो अच्छी तरह से जानते हैं, उनका नाम पूरी दुनिया में as a valuer अच्छा माना जाता है. Then Mr. Shrikant Joglekar. I think as I know, he is no more. As I know, I may be wrong.
I met him in Aurangabad in one of the program I was representing ISA. So he belonged to Bombay. He has a big company.
Yeah. This is inner view of that book. Next, I think this I bought in 1990 or 92. I don't remember exactly. So मैंने उसको mention कर दिया है. Fixing sum insured under engineering policies, a book costing 10 rupees, but lot of insights are there. Big wigs of industries of 1980s. वो कंपनी के चेयरमैन भी थे और our very respected
मुझे लगता है कि सर्वेयर्स के लिए ये जो दो किताबें आप बताने जा रहे हैं, फायर और इंजीनियरिंग में, ये बेस्ट हैं.
These are very useful. I am ready with the soft copies, but unfortunately मैं copyright breach नहीं करना चाहता हूँ, इसलिए float नहीं करता हूँ. But if these two books are read properly, I think most of our adequacy of sum insured के issues solve हो जाएंगे. ठीक है ना? There's third book also, fixing fire for LOP policies, sum insured. Next is fire policies. Next please. ये वो किताब है जिसने मेरे जीवन में बहुत बड़ा परिवर्तन लाया फ्रॉम वेरिफिकेशन ऑफ एडिक्वेसी ऑफ सम इंश्योर्ड. मेरे कॉन्सेप्ट क्लियर हो गए एंड आई ऑलवेज विश कि मैं जितना जानता हूं दूसरों से जान करके और शेयर करूं. नेक्स्ट पॉइंट प्लीज. Then this session was dedicated to this particular book and all those big wigs who had spent time out of their busy schedules और उन्होंने तैयार किया. देन पेरिस वैल्यूएशन टेबल्स आर देयर. मैं सजेस्ट नहीं करूंगा अभी इनको रेफर करने के लिए. इसका लास्ट एडिशन था 1958 का, दो इट इज स्टिल रेफर्ड बाय मेनी प्रैक्टिसिंग वैल्यूअर्स, बट ये कैपिटलाइजेशन और डीसीएफ मेथड के लिए अप्लाई होती है. तो मैं जस्ट आई एम गिविंग यू अ रेफरेंस. नेक्स्ट पॉइंट प्लीज. उसका इनसाइड व्यू है 1967 में आउट ऑफ प्रिंट हो गई. नाउ नो कॉपीराइट ऑन दिस. मेरी तरफ से मेरा सबमिशन हो गया है सारा. नेक्स्ट स्लाइड प्लीज. नेक्स्ट स्लाइड प्लीज. ओके, नेक्स्ट स्लाइड प्लीज. नेक्स्ट. Okay, if time permits we can go for panel discussion.
Senani sir, now it's 8:45, so we'll not
45.
able to continue this panel discussion,
Right.
as many of the members are sending the message that it's already 8:45.
Right, agreed.
Yeah, and what I'll suggest is that you can share the list of the books whatever you have shown us. Okay, we will talk to their publisher and we will try to get it copy for the ISLA members.
Right,
ये तो GIC किताब है, फिक्सिंग सम इंश्योर्ड. 10 रुपए की किताब है. मेरे ख्याल से 10 रुपए की भी नहीं है, ये फ्री है. थोड़ी सी हो सकता है 10 रुपए की है, और मुझे लगता है इसमें कोई कॉपीराइट का इशू नहीं है. एंड दिस वेरी वैल्यूएबल. ये जो सबसे बाद में दिखाया है, इंजीनियरिंग के लिए भी है और फायर के लिए भी है. आई थिंक
और एलओपी के लिए भी, एलओपी के लिए भी है. दैट इज अवेलेबल फॉर एलओपी.
या तो ये मुझे लगता है कि देयर आर टू थिंग्स दैट वी हैव टू डू. वन, ये हम बुक प्रोवाइड कर सकते हैं. सचिन, यू आर हियरिंग मी?
Yes sir.
अच्छा, अनदर बुक वाज अबाउट द इंश्योरेंस लॉस असेसमेंट ड्यूरिंग ऐसा रश्मि देसाई के पीरियड में एक आई थी. That is
Volume
still
1,
very
Volume 2.
Volume
1 and volume. I've got soft copies. Again, if we get permission from ISA, it can be circulated on LMS. It can be posted on.
What I recommend, if the आपका जो ये प्रोग्राम है, ISLA, क्या नाम रखा आपने इस प्रोग्राम का? LMS. So what I suggest that the 3 books he reported now for engineering, fixing sum insured for engineering policies, and this, and 2 tool books जो अभी इन्होंने बताया है कि for loss assessment, ये मेरे पास भी हैं किताबें, but they are excellent book. मतलब एक बिगिनर के लिए भी बहुत अच्छी है, और उसमें क्लॉजेस को बहुत प्रैक्टिकल ढंग से किया गया है. सर्वे रिपोर्ट फॉर्मेशन के बारे में बहुत दिया गया है. मरीन के जो डॉक्यूमेंट हैं, जो पर्टिकुलरली जैसे बिल ऑफ एंट्री और ये आपके बिल ऑफ लेडिंग, इनके बारे में बहुत अच्छा डिस्क्राइब किया गया है. जो डिफरेंट वो है जो हमको जार्गन लगते हैं. So they have made what is mentioned here, what is the purpose of this, what is mentioned here, what is the purpose of here. So these 3 books are very good. तो मैं सचिन को ये रेकमेंड करूंगा कि इससे बड़ा काम कोई हो नहीं सकता. If we share these 3 books to all the participants, these 3 books, one he is referred and the 2 book assessment के हैं. So the copy I can arrange, but उनको कॉपी करना और डेवलप करना वो एक काम है अपने आप.
That I can
Yes,
do.
we will do it. That we will do it at our back office. No problem, sir. You just share the copy, we'll do it.
तो ये
Okay,
जो
sir.
खजाने की बात करें ना, जो आप रिसोर्सेज की बात करें, दीज आर द रियल रिसोर्सेज. इसके पहले जो बहुत सारी चीजें हैं आपने रिसोर्स किए होंगे, जो है किए होंगे, दे आर नॉट सो हैंडी, बस दीज थिंग्स आर वेरी वेरी हैंडी फॉर दिस. ये तो ऐसा है कि आप हमेशा किताब रख करके काम करेंगे, मतलब दे विल ऑलवेज इन फ्रंट ऑफ यू फॉर एवरी सर्वे.
I'll honestly admit कि आइजा की वॉल्यूम 1 और 2 मैं अभी भी रेफर करता हूँ, अभी भी रेफर करता हूँ.
या
Right,
Yeah,
sir.
so
Thank you all the panelists, and I appeal to all the members that come forward and share your knowledge, like Senani sir, Mr. Kapoor sir, Mr. Shukla sir is
Mashroom.
sharing their knowledge, their experience with the members. So sharing is a caring. If you share your knowledge with the newcomer surveyors, so it will help us as well as the industry to grow together. So I will request and appeal to all the members to come forward and share your knowledge. It is your platform. It is, I mean, but you have to just give us this the presentation, whatever you are ready with your presentation. The only thing is that you need to be very genuine with your presentation. Do not make any copy paste presentation from here and there. Do some homework and come up with your version, and we will definitely give you chance to share your presentation with the members as a panelist. So thank you very much. Thank you all the panelists, Senani sir, Shukla sir, Mashru sir, and Mr. Kapoor sir. And thank you all the members. We'll meet tomorrow morning 11 o'clock.
good night. Good night.
Thank you.
Thank you.
Good night.
Thank you very much. Good night, everybody.
Thank you.
Thank you.